Hey guys, JH here, Greenroomfx. Welcome to the Beginners Forex Guide course. So, if you're new to Forex, this is perfect for you. If you're not new to Forex, this is still good as a refresher for the basics of Forex. We're gonna start from 0 to pro, guys. So we're gonna take this step by step. So we're gonna start with the about me. We're gonna talk about me. Talked about holistic learning, which is the method I'll be using to teach you this content. What is Forex? Forex fun fact, the main movers of the market, history of Forex, sessions, pip movements, and in the end, I'm going to talk about Greenroomfx. Anyway, I'm going to mention in the description below the timing. If you want to skip through and see specific topics you want to see, you can do that. It can be mentioned in detail below. Alright, so before we start this course, I'd like you guys to please subscribe to this channel and like the video. It's gonna be very useful for you, especially if you're new at Forex. We're gonna keep advancing through the material now and next week when I upload it. In the next course and the week after, you're gonna need to know the information properly. So it's like mathematics, you know, you can't just get to the equations. You need to start with the basics, and that's what we're gonna be doing here. So let's get to business, guys. Let me just give you a quick introduction about myself. I'm Joe. I made Greenroomfx 4 years ago. Before that, I was trading crypto, but I didn't like crypto that much. I was just buying on spot. Honestly, I didn't trade futures that much because of uncertainty, and I just didn't like it. You know, each person has a preference and taste. I do have cryptos. I am holding cryptos, but only as spot, nothing else. We're doing Forex and gold trading. The courses are just a bundle of 3. Technical analysis. So technical analysis is studying the charts, looking at patterns, understanding the candlesticks. We'll get to that in a bit. Fundamental analysis is news trading. So there's traders that do fundamental analysis as in, okay, basically it's gambling. For me, I don't just do fundamental analysis, but sometimes it's useful. For example, when COVID happened, it would be safe to say just buy gold, and 2008 financial crisis, buy gold works. You know, these stuff are beneficial in these times, so they have these certain timings where they would work. And of course, this is the most important thing, and it's psychology. This is what determines if you're gonna be a good trader or not. If you have the technical and the fundamental without the psychology, you're going nowhere, buddy. Now let's move on and get out of here to holistic learning. All right, so this is the method that I'm going to be using to teach you. Scott Young defines holistic learning as how to study better, understand more, and actually get what you want. What does that mean? Basically, I'm going to try to relate content to senses, to emotions, to graphic images. So I learned this technique actually in university by my own because I sucked at school. I really sucked. I didn't know how to study. I didn't know how to memorize. I just wanted to finish ASAP. I was just really bad, man. I was getting C's, D's, whatever you want, even F's. It is what it is. So we had to learn a new technique. Holistic learning worked for me. I think it's the cure for people who hate studying. Let's go through what is Forex for now. Forex is a short for Forex exchange. So let's say you're in Germany right now, your income is in euros. You want to travel to the United States. So you go to the United States. There's an exchange shop at the airport because you're going to need dollars to spend. No one takes euros in the United States. It's the main currency for the country. So you go to the airport, you exchange your euros to dollars. That's Euro USD. That's an exchange right there. So this is basically what you'll be doing, but online from your phone. Okay, guys? So can anyone have access? Yes. Everyone's been lucky to be given access to the financial markets through brokers and platforms online. So basically, you'll just need to make an account and fund it, and you'll be good to go. By the way, the second you press a button and make an online exchange, you're joining the biggest market in the world. We're talking $5.3 trillion traded on the daily. It's a crazy place to be in, and it has a lot of money to give back to you. Moving on to the next topic, the Forex fun fact of the day. I'm going to release one every week on every lesson. So for today, we're talking about bulls and bears. What do they mean? Where did they come from? And why? Let's think about it this way. When you open Bloomberg, you open CNN, usually a stock is rising and they just use the terms bull, and you're like, why bull? I don't even know. I didn't even ask myself that question. I just automatically, okay, bull up, bear down. So now I'm just going to tell you why it turns out to be the case. So basically, we're going to start with bear. Bears indicate a bear which attacks downwards using his claws. So it's an actual bear. So the way the bear attacks, okay, this is not the way a bear attacks, but yeah, I'm just trying to be funny here. But yeah, basically a bear attacks like that, downwards, so which means the bears are in control. You can see from the picture here, the price is declining, the bears have control. And the other one is bulls. So bulls is, this picture explains itself. The bull attacks upwards using its horns. So when the market is rising, they use the word bulls as a metaphor to indicate the bulls are in control of the market. And that calls it for the Forex fun fact of the day. Moving on to the next. So we're looking at the main movers of the market. You know who moves the whole market. It's the banks. The banks have it all. They do it all. Don't mess with the banks. Don't try to fight the banks. There was only one guy who tried to fight the banks and he won. It was George Soros. And this was like 30 years ago or more. I'm not sure about the timeline on this one, but it's pretty old. George Soros broke the Bank of England. He was selling the pound while the banks were buying it, and he just broke the country's currency. So who moves the prices in the markets? So we'll start with the banks. They control about 75%. Mind you, these numbers are not 100% accurate. No one has the exact numbers. Second are the hedge funds. The banks are still stronger than the hedge funds, so they give them spanks all the time. But the real people getting spanked are us in the end. Don't ever think you can change the market with a few $1,000s or move the market with even $100,000. This is a 5.3 trillion market cap. So you're gonna need a lot of money, bank money, to move the markets. So now we're moving on to the next one. We're gonna talk about the history of Forex, because honestly I'm not gonna talk about the history of Forex because it's not going to contribute to making you a better trader. However, we're gonna just use history. The only way we could be using history properly is by comparing a historical chart to a present chart and seeing how they relate and how we can relate events and future events together. So let's look at gold chart, daily chart. Look at what happened post 2008 crisis. We kept rising, and a few years later we reached a new high on gold. COVID crisis 2019, and we hit COVID crisis. Boom, boom, boom. We kept rising, also made a new high right after that, and then we subsided a bit. Usually when the crisis becomes less of a crisis, prices do fall. Basically, gold, how it works is gold is a safe haven. It's a risk asset. So when people are scared, when people are fearful and stocks are crashing and everyone's in panic mode, they invest in gold. Gold rises in value in crisis times. Sessions pips, an average pip movement per session. So here you might be looking at the screen and you're like, whoa, what is this? Now it's getting complicated. No. Just stop right there. This is still easy. This is we're still on the basics. These are just basic information, basic knowledge, must knows for every trader. This is a bit over detailed, so I'll tell you. Oh shit. First of all, take a screenshot of the whole screen right now and try to print it out, put it next to you for future trades and trading, because you're probably going to need it. So let's see in the beginning, for example, there are 3 sessions. The Asia session, which is made up of the Sydney session and the Tokyo session. Here are the timings of the session. And the Asia session, usually it's not that fast, so you can trade support and resistance, I'll explain what that is later. So if you're in Europe, you wake up, boom, London session. Liquidity is high in the London session for GBP and the pound. Very high for the pound, actually. Then we move on to the US session. US session is extremely liquid. There's a lot of money coming in and out. You'll see that yourself. So basically, you'll need to know this information just so you can relate to which session you're in when the time you're trading at. So you'd know which pairs are going to move the most, which pairs are the most volatile at this time, and how to make the most out of the market. So now we could be looking at the right side of the template. Here we can see the pip movements per session. Here are the pairs, the Forex pairs, not all of them, but most of them, the main ones at least. Euro USD means euro dollar, GBP USD pound to the dollar, USD CAD dollar to the Canadian pound, NZD USD New Zealand dollar to the US dollar. We will get into more detail about the pairs on the next lesson, so don't worry about that. Everything is going to be covered. You're going to get to know everything. Anyway, let's continue here. Here are the pairs we just explained, and there are the days. These are the pip movements of each pair depending on the day on average. Okay, now you're going to be like, what's a pip if you're a new Forex trader? Do it on a separate slide next week, but just to give you an idea of what a pip is, it's, for example, let's say Euro USD is at 1.1990, and then a second later it's 1.191. So that moved 1 pip, right? It's because there's a 1 difference. So that's a pip. So here, for example, Euro USD on Monday moves 109 pips on average. So you make money on pips by when you buy, the price increases, for example, 109 on average pips. So bear in mind, this is not a direction of pips. This is just an average movement. The most volatile days of the week are Tuesday, Wednesday, and Thursday. Other days such as Monday and Friday are much less volatile, and Sunday is not volatile at all. When the market opens, don't trade at all. I would not recommend it. Monday you can do a bit of trading, but it's not that reliable. Friday is also not that reliable since banks and hedge funds are usually cashing out their positions. You could use this sheet, like I said. If you haven't screenshotted it, screenshot and just keep it on the side. You can use it in the future just to choose which pair you want to trade for that day. For example, JBP JPY is a very nice pair to trade on a Thursday. You can have a focus on that pair to make money on the volatility. So you'll need to learn how to do risk management, money management. I'll teach you all this stuff later. Don't worry about it. We can move on now to the next slide. We finally made it to the last slide, guys. What is Greenroomfx? Greenroomfx provides signals, education, and community of traders copying my signals every day. I send out signals for paid and for free. You want to try free signals, you can join my Telegram link, and it's right below on the description. If you want to know more about the company, you can check out Instagram, Greenroomfx. That's where tons of testimonials there. Here's the WhatsApp number. We have Facebook, email. Also, we have a website. It's also included in the description below. Thank you guys for listening. I hope you enjoyed this lesson and have a nice day.